You spend money and you get money. You have an income, which is probably your salary or your wages, and every month you have expenditure. You have to pay for your rent, installments, standing orders, food, heating, restaurant bills, and so on and so on. Now, if you look at a company or an organization, money is not really any different. Finance is simply all about dealing with the money. It's about looking at, controlling, recording, and analysing income and expenditure. And a company or a business does this in order to make sure that the business can run effectively, that the day-to-day operations run effectively, that the business can grow and the operations can grow, and that the company can meet its goals. Now, what you might like to do, if you haven't really thought about this before, is think about what is the revenue or the income of a company? Where does it come from? And what kind of expenditures does any company or organization have? Maybe you just want to stop the video and do a quick brainstorming of that. Now, if we look at the revenue of a company, it probably comes from the daily operations of the company, which is the sale of the product or the products or the service or the services. Now, income is not always just sales of the product or services. It could be that the company has some kind of investments and they get income from that. And it could also be that the company maybe rents out buildings or something like that, and they have some kind of income from it. Now, expenditure for any company covers a whole variety of things, and I can give you a short brainstorming list, but it covers, as I say, many things, and this is not a full list. So expenditure will cover everyday items, so everyday supplies of things like office supplies. It will cover machinery and the maintenance of that machinery. It will cover the payroll, which is the salaries and the wages of the employees working for the organisation. It will cover advertising, insurance, taxes, and so on and so on and so on. Now, here we're talking about a business English course. And you certainly don't need to know everything that there is to know about finance and all the ins and outs of finance for a business English course. But you do need to know some of the basic documentation, the basic functions, the basic concepts, and some vocabulary to help you do any course and to communicate and to do any exam. Maybe you'll go on to do finance in much more detail in another course on your degree or course, or maybe you're really interested in finance, or maybe you're actually studying finance as a specialization. So firstly, finance is all about bookkeeping, and bookkeeping is all about those transactions and recording those transactions. So making sure that you record the income and the expenditure. So making sure that your invoices are sent out in good time for the goods and the services that you provide. Making sure that those invoices are paid correctly and on time. It's about checking all the receipts that the company gets. It's about recording any invoices from suppliers and vendors and making sure that the company pays those invoices correctly and on time. Now, in accounting, what the company or the organisation will do is take all these transactions and transfer them into different statements. And a little bit later on, we're going to look at some of these statements. And these statements are made by the company and they're done in accordance with reporting standards. Accounting will also be, or finance will also be, to do with taxes and making sure that the company pays its taxes appropriately and correctly, and making sure that the right government forms are filled in correctly, and making sure that all tax filings are done on time. Finance is also about evaluating and analysing numbers and figures and trends. It's also about forecasting numbers and figures and trends. It's also about comparing numbers and figures and trends. And it can also be to do with allocation of resources. So, for example, of monies, and making sure that monies are available for different projects in the company and how those resources are allocated. So looking at bookkeeping, let's first of all look at an invoice and what does a business or company invoice look like and what kind of information is on that company or business invoice. Now what I've done here is put together a very simplified invoice just to give you an idea of what it might look like and what kind of information is contained in a typical kind of invoice. So the invoice, first of all, it will have the company name. It will have some information about the company's bank account. So the bank account number and the sort code for the bank. There will be a date for the invoice. Now that will be very important because the payment will depend on the date that the invoice is sent. It's probable as well that in the country that you're working in that you also have to give an invoice number, and in many countries these numbers have to be sequential, they have to be in some kind of order, and you have to give tax details or the tax number and the tax office of the company writing the invoice. So the company then will outline the goods or the services that have been sold. So a description of the products and the number of the products that have been sold. And the value of these products or services are added up, and it gives a sum total, which is a net sum or a subtotal. And then in many countries, then you will add some kind of tax. This could be a kind of sales tax. In the United Kingdom, we have value added tax, often called VAT for short, and this is added to the invoice. Then you will get some kind of adding the tax and the sum for the goods, then you get some kind of gross total. So net total and gross total. Now the other thing you will get is some kind of details of the conditions for the buyer paying the invoice. And these are called payment terms. And as you can see on this bill, the payment should be made within 30 days of the date of the invoice. Now you can give extra information on the payment terms. For example, here there is a discount for prompt payment within 5 days. So quick payment, immediate payment of the bill within 5 days of the invoice. Right, so now let's have a look at some of these financial statements. And the first statement I would like to look at is an income statement. And I'd like to look at a simplified version of the information contained on an income statement. Now, an income statement shows the trading, which is the profit and loss in a period of time. And as I say, this is a simplified version to give you a feel of what it looks like and the information that is included on this income statement. There is information about the revenue, which we said before is another word simply for income. Information about the net profit, the gross profit, the operating expenses, so the day-to-day expenses of the company as we saw before, and the profit before and after tax. Now, if you want to look at a real income statement, this is really easy because most companies or many companies will have to publish or make public their financial statements. And the place that you'll often find them is in the annual accounts of the company. And these are freely available mostly online. And what I'd like to do in this video is look at the annual accounts for 2021 of the company Adidas. I think it's quite an interesting example here because it's a German company, but they're publishing their accounts in English. And I would just like to show you this income statement from Adidas in 2021. As you can see, there is much more detail, but it is all about incomes and earnings, and it's for a period of time. So from the 1st of January 2021 to the 31st of December 2021. And the year 2021 here is compared to the year 2020. Now, the next financial statement that we should come along to is the balance sheet. Now, the first thing to recognize about a balance sheet is that it is a snapshot. This is the key phrase that's often used, a snapshot of the business at a specific point of time. Now, this is different to the income statement, which is for a period of time. And I would like to just show you a simplified example of this. And a balance sheet is basically a list of the assets, the things that the company has, and the liabilities, the things that the company owes money for. And let's just have a quick look at what some of these assets and liabilities might be. So if we look at this simplified version, we can see that assets includes cash, the accounts receivable. Now, accounts receivable is the money that is owed to the company, for example, by suppliers or vendors. It's the inventory. Now, inventory are the products that maybe have been manufactured, but they haven't yet been sold. Maybe they are being kept in some kind of warehouse. Sometimes another word for inventory is stock. Now, liabilities is accounts payable. So this is the money or the business that is owed to the suppliers. It covers salaries payable, which are the salaries that you owe to employees, or taxes payable probably to the government. Maybe the company has taken out some kind of bank loan. And another item that will be added to liabilities is equity. Now, equity is the value attributable to the owners, or very often the shareholders. So equity is the value attributable to the owners, probably the shareholders. Now, if we look again at Adidas in 2021, we'll see that there's more detail, but the basics are basically what I've just described. It's a snapshot of the business on the 31st of December, and it's a list of the assets and the liabilities. There's maybe one thing that we should maybe go into more details on, and that's intangible assets. Now, intangible basically means you can't touch it. You've got tangible and intangible. Now, intangible assets in a company will cover things like goodwill. And goodwill is really a value that's put on the established reputation of the company. It could also cover intellectual property, which is the value, or IP for short, which is the value put on creative works that the company has. This could be things like inventions, designs, images, and copyrights. Now, the next thing that we need to get to grips with is the idea of cash flow. Now, a company or an organization can make a profit. It can be solvent, and it can have solvency. A business can also, if it goes badly, it can make a loss. And eventually, if it makes too many losses, it will become bankrupt, and there is bankruptcy. Now, cash flow can be the difference between solvency and bankruptcy. And it's a little bit different to simply making a profit or making a loss. And it's about managing the company flowing in and out of your organization. So it might be helpful here to give an example. So for example, I could be a sole trader. And I'm a sole trader offering some kind of service to companies. And I start my business on January the 1st in a certain year. And I spend the whole of January providing this service to different clients. And in this time I have different expenses. I probably have to run some kind of car which gets me or to the clients or take some kind of transport. I have basic office supplies. I have the materials that I need in order to provide the service that I'm providing. And I work with my clients and I work all the way through January. And then I get to the end of January and I write some invoices and I send them to my clients. Now the clients might get the invoices a few hours later, maybe a few days later. But when they pay them is a different question. Maybe your clients pay very promptly, or maybe you encourage them to pay very promptly. Maybe your clients have certain days of the month where they make payments. Maybe the client will pay the invoice at the end of the month, which will be the end of February. Or maybe the client will even make a late payment and will make the payment towards the middle of March. Now, as a sole trader, this has consequences because you will write your invoices and then send them to the client, and then you will begin to work for the clients again during the month of February. And again, during the month of February then, you've still got all your expenses. You're running your car, you're running your home office. And it could be that no money or very little money is coming into your bank account. And all the time you're having to pay your expenses. So managing cash flow is about managing this flow of money, making sure all the time that it's a balance between incomings and outgoings, and that you have enough money in order to pay your ongoing bills. Now, what companies produce here as well then, cash flow is very important. As I say, it's the difference between solvency and bankruptcy in many cases. And companies then produce a cash flow statement. And again, I would like to look at the cash flow statement for Adidas in 2021. Now, there are three things entered onto a cash flow statement. There is cash from operating activities. So these are the normal functions of the company. There's cash from investing activities, which is the buying and selling of investments. And there's cash from financing activities, which is to do with the owners, the shareholders, the creditors, and the bank. Now, at the end of the cash flow statement, there is an entry for cash and cash equivalents. Now, this is the normal entry on the financial statement, the sum of the net cash flow. Now, as you can see, the cash flow statement here has a lot of detail on it, but if you basically understand for business English what cash flow is, how cash flow works, and that companies produce cash flow statements, that again, they're for a period of time, and it will show you quite a lot about the health of the company and how the business is operating. And then there are these three items on the cash flow statement. Now, to complete this video, I'd like to finish with just a few idioms again that you can incorporate in your writing and in your exams. And the first one is balance the books. I've mentioned balancing the books quite a lot of times, and we can use this in our day-to-day speech. So, for example, I balance my own books at the end of every month. So I check my credit card statements, I look at my receipts, and I check that the entries on my credit card statements are correct, and I pay for my credit card bill. I also check my current account, and I check the incomings and the outgoings, and I check that they're correct, and I try and keep that current account in the black. Now, another phrase we can use here is cook the books. Now, cook the books is more negative. Cook the books is using the numbers and the figures to show that the performance or that something was much better than it actually is or it was. And this is to do with manipulating the numbers and the figures, maybe doing something very dishonest or very illegal. Then we've got the phrase, I'd like to give you the phrase golden handshake. Now, golden handshake is an agreement between the employer and the employee. And this is when the employee is going to leave the company. It could be that the company is restructuring, for example, and they don't need so many employees. And then the company makes the arrangement with the employee to pay a sum of money. It's often a very large sum of money, and the golden handshake may also have other items besides the actual payment of the lump sum. Golden handshake is sometimes called as well, it's called severance pay. And then there's a couple of other little phrases that I'd like to introduce you to. Another one is have a whip round. Now, have a whip round is when you go around the employees of a company or maybe a department and you collect little sums of money for another employee. And this could be because that employee is leaving the company, they're going to another company, or maybe the employee is retiring, or maybe the employee simply has a birthday and you want to buy a small present for that person. This is having a whip round. And the last figure, or the last expression I'd like to introduce you to is the idea of ballpark figure. It's quite a nice expression. It simply means a rough estimate, a rough amount, a rough idea of what the figure is. For example, here in my house, I may have some kind of contractor come in the house, is going to do some work on the house, and I get them to inspect the work. And then the person says to me, well, I really need to go back to the office and work out the figures and then tell you how much it's going to be. And I could say, well, yeah, I really understand that. I know it's difficult at the moment to give me the exact figure of the amount, but could you maybe give me a ballpark figure so that I can budget for the amount that will be needed for this work? Now, in the next video, we're going to look at describing and talking about and writing about these numbers and these figures and these trends. So I'd like to thank you really very much for listening to this video. If you liked it, please hit the like button, please hit the notifications button, please subscribe, and I'll see you in the next video. Thank you again for listening.